And as in poker, the money in some ways is not the point. It's how you keep score.
Don't chase the complete chaos just because of its chaos. Like, find quality, try and be a bit counter-cyclical to what the rest of the market is doing.
A disciplined investor doesn't copy that behavior. They might take small measured positions against it, accepting the variance, and let fundamentals win over time.
And when things are volatile and wild, like, retreat to a place of kind of safety and security a little bit.
For an advertising-free version of the show, check out patreon.com/Wall Street Wildlife.
Welcome to the Deep Investing Jungle with your hosts, Luke the Badger Hallard and Krzysztof the Monkey Piekarski. This week, Krzysztof updates us on his 10x portfolio, which stocks are flying in the 10 months since he last made his predictions and which are a flop. How does poker relate to the stock market? How to beat the game when chaos and FOMO and YOLO dominate? We're going to explain the concepts of adaptation and variance. Plus, I go on stock safari with a private investment I just made into Whoop, the activity tracker company that's becoming a medical device manufacturer. Krzysztof's got something to tell us about the Netflix documentary Unknown Number and how it relates to investing. Plus, he's got a question for me. Should he sell his EOS and ASTS stocks? Whoa. But meanwhile, I'm holding firm to my core, and I'm going to give you guys an update on two of those this week, Intuitive Surgical and Axon. But first, we're going to break down Elon Musk's $1 trillion compensation package. Is this a disaster for Tesla shareholders?
All right, Badger, this is good. This is good because I heard this news and then I did other things instead of looking into it. And that's why I hire you. That's why I pay you the big bucks. So
$1 trillion?
And yeah, Tesla is one of my potential 10x companies. So I need to know, is this good? Is this bad? Is this ugly? What's happening here?
Well, I mean, if you want a 10x from your Tesla investment, this is probably good because suddenly, like, Musk has reinvigorated his pay package. Here it goes. He has got a mammoth pay proposal from the board with a whole bunch of milestones he has to achieve around increasing the market cap of the company from $2 trillion up to $8.5 trillion at the highest milestone, and also delivering a whole bunch of operational milestones, which involve not just like the sci-fi stuff like robots and AI, but also just delivering cars, which is like the core of the company today. So this is good if you believe he can deliver on these goals, and this is going to deliver you your 10x for Tesla. And he only gets paid when shareholders get paid. Sorry.
So just one note. At the moment, Tesla is at a $1.14 trillion company just for, so to get to $2 trillion is approximately 100%.
Yeah, and that's his first milestone. He's got to deliver a $2 trillion market cap, and he's got to deliver 20 million vehicle deliveries to hit his first milestone and get paid like the first tranche of what's going to amount to like a significant $1 trillion pay award. I dug into some of the nuances of this though, because you could read it and you could go, okay, this is either I kind of believe in this and we want Musk in the company, or this is just like nonsense and like how dare any human believe that they're worth like $1 trillion. And like, love it, like it or not. So this is a proposal from the board. It's going to come to the AGM, which is like the annual meeting, which is I think November, and it has to get voted on. And then the board are like recommending that shareholders vote in favor of this. Like, Musk doesn't currently have a long-term performance award. You might remember that one that he did have that he achieved against like all expectations, and then it got canned by, was it the Delaware courts after I guess a bunch of activist investors got behind like one retail investor and said, okay, like file a case. And as a consequence of that, I don't think Musk got paid. And as a consequence of that, the company is re-domiciled to your home state of Texas, right? Yeah. I guess Musk has to believe that under the new Texas domicile, if he earns this, he's actually going to get paid it because he's on the line for essentially the next 10 years to be like lead this company to these incredibly challenging goals. Like there is no argument this will be very, very hard to achieve all of these goals. And I think they're pretty good goals, actually. Like you can game the market cap, but Musk has to sustain a market cap at each of these levels for 6 months. And like I think there's like a quarterly review. At each quarterly review point, like the last 6 months, average market cap has to be above the milestone, and also the last 30 days average market cap has to be above the milestone. So you can kind of game market cap a little bit as a CEO, but not for an extended period of time. I would have preferred that it was like enterprise value because maybe there's some shenanigans they can pull with like debt or something. But I think these are reasonable milestones, and I'm a fan of them. He also has to stick around for a long time. Like, I think he's only going to fully vest the shares on the 10th anniversary of them being granted. So, like, he's on board with the company and he has to lead the company throughout that period. And I don't think he's taking a salary or any cash bonuses. Like, this is the entirety of his compensation. You can say, okay, like, the guy is obviously like 100 billionaire already. Like, he's very, very wealthy. And he has a ton of Tesla stock, so like he benefits when we all do. But this is still significant. Like he could leave the company today. He owns a ton of stock, and then it goes where it goes, and he's still got the benefit. And so this is going to be like his main focus, and I think that's what I like most. And I had to dig into the appendix of this like nearly 400-page document to see the one thing I was looking for, which is the board are holding Musk to well, they've received assurances, they document in the appendix, that his involvement with the political sphere will wind down in a timely manner. I think that's what probably all shareholders want. We don't want Musk like starting new political parties and like sticking his big foot into that world. And so I think this compensation award probably does the right thing in terms of getting him to like can it and focus on the company itself, which I can only be a good thing for shareholders.
All right, Badge, a few things. First, with regarding the political thing, I mean, what's the phrasing and how can they sort of prove that to be the case? It seems kind of squishy to me. I like directionally where it's heading, but is this like a real thing?
That is really interesting because there is a shareholder proposal for political neutrality, and the board are recommending that shareholders vote against that. So when you're a shareholder of a company, like you can put forward proposals that the annual meeting has to vote on. And I don't know the mechanics of it for Tesla, but if there's enough support, then something officially goes on the agenda and it gets voted on by shareholders. So a group of shareholders have proposed that the company and Musk be officially politically neutral. And the board are recommending against that, they say in this document, because it is, for the reasons you said, it's kind of unenforceable. It's almost impossible to judge. There's so much nuance. So it's kind of ungovernable. So I think the language in the appendix is probably more sensible. It's essentially, it literally says, ultimately, the committee believes it's critical to Tesla to secure Musk's commitment and to receive assurances that Musk's involvement with the political sphere will wind down in a timely manner, and then blah, 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 some other stuff. So it is like soft and squishy, and it's more like a directional aspiration. And it's probably enough that if Musk were to really like go bananas, let's say he launched his third political party and really made that like a big focus of his mission, that would clearly be against the spirit of this commitment that he's presumably made to the board, because they say in the appendix they had like 12 meetings with Musk to work through this and agree like the finessing of this thing. So if he kind of ignores that bit, then they're probably within their rights to cancel other aspects of the award as well.
Okay, that's huge. That's why I wanted to ask you. I haven't kept up with the latest soap opera, Musk soap opera, and I wasn't sure whether he and the board are in alignment or whether they're trying to put some activist reins on him or what that dynamic was. But if they've been meeting so much, then clearly he had to at the least like sort of turn neutral in those conversations and allow that to be included. So that's good news. Here's what I think a lot of people are wondering, or at least normal people. uh, they're like, well, if this guy has hundreds of billions of dollars, what difference does this make? And the way I understand this badge is that after a certain point, we're talking about existential meaning of life stuff. And as in poker, the money in some ways is not the point, it's how you keep score, right? It could be peanuts, but it happens to be money. And in this case, sure, an extra $100 billion will not do anything for Musk because I mean, really, you can only buy so many whatevers, right? I was going to say like Corvettes, but in his case, maybe Cybertrucks or and he probably gets those for free anyway. So why does this make any difference for us? And I do think knowing the people who run your companies well, we know this guy operates on a different software system, and he's one of his main goals in life is colonization of Mars slash outbeating Bezos, and every additional 100 billion is important to him for reasons that have nothing to do with like call it this typical bank account, right? And that's important to know because if you don't know that, then you might think like, yeah, whatever, but this really would motivate him.
Yeah, and like he said clearly, and actually even says in that same appendix at the end of this big document, during negotiations, Musk reiterated that it was crucial that he both acquire at least a 25% voting interest in Tesla and assurances that he will get paid for like the past performance award. So it's less about money, or it's about money, obviously, but it's as much about control of like the direction of this organization. And it says in the appendix, Musk also raised the possibility that he may pursue his other interests and leave Tesla if he did not get such assurances. So yeah, like control of the company, and he has got like XAI where he's doing a bunch of interesting stuff, and he's got SpaceX and Neuralink. Like there's been talk that maybe there are some initiatives that could really sit in any of these boxes. And there's stuff that Tesla shareholders will want him to do as part of the Tesla entity. And if he hasn't got enough control over Tesla, he's essentially threatened to say, well, I'm going to do these things, these AI things elsewhere. So, it is about kind of aligning his interests with Tesla so much to make it like his favorite toy. So he does all the interesting stuff with that toy, not with some other toy.
So net, what's your take? Good, bad? How many bananas we given this move for Tesla shareholders, or Badger acorns, or whatever? How do you keep score? What is it that you?
Good. I like it. I like it because if he succeeds, we succeed, and there might be a little bit of gamesmanship between like the lines, but the essence of this, like no one believed he would, or at least the market in general didn't believe he would deliver like the old performance award, and he smashed it. So if he can deliver this one, and we're looking at like an $8.5 trillion company, not only will you have achieved your 10x portfolio for one of your like rows on the spreadsheet, but we'll all be significantly richer as shareholders. So I'm happy.
Yeah, and you know what I forgot too is because of the political clusterfuck of the last, what is it now, 2 years going on 2 years or whatever. How I've been following Tesla since got over 10 years now, I think, and that sort of younger, hungry, lean Musk, that was literally sleeping on a factory floor meme stuff that wasn't a meme because the guy's crazy in that way. Like to get him back to that space with Tesla, focused would be huge because he still has the most levers and the most leverage of probably any CEO in the world. I mean, to try to attain these massive, massive missions. So it's exciting. This is good. This is good. I feel a little more positive about my Tesla holdings.
Great.
Excellent. I mentioned poker very briefly, but I want to go deeper into another one of our favorite analogies. And this is I came across this write up on X by the Stanford econ prof Kevin Mack. I really like his stuff. He's just very he tries to be really objective minded, and you could see how he doesn't succumb to biases often. And he wrote a thing about poker, so I'm sure he's a serious poker player. And there's something I really liked in which he explains the difference between adaptation and variance. But the context of this was a familiar refrain. I don't know how often you felt this, Badge, that pro players, when they get involved in a bad game, say they were so bad I couldn't beat them. Because what he's really referring to is what a bad game means is that the players are doing God all knows what, and all your high level game theory and probability and all this stuff mostly goes out the window because they're not even thinking on those levels. So to backtrack, so how do you beat a game like that? So the first concept I just want to briefly elaborate on is adaptation, which I think is familiar to most people in the common sense term that as in poker, as in the markets, context changes. Easy example is in poker, if you're playing with really good players and everybody's playing what we call tight, they're playing the best hands, right? So they're throwing out a lot of junk. They're not approaching it in the gambling way. And so if everybody's playing tight, it's to be successful, you can't really play tight and expect much alpha because everyone has the same playbook. So in that moment, you kind of need to loosen up your starting criteria and do it in a way that's, kind of shifty, but you have to adapt is the point. Obverse is true. If everyone's playing whatever, you got to tighten up and so forth. Analogy to the market, I would say easy to understand is when the market is really lofty and everyone's talking about their next Ferrari and going, YOLO, FOMO, all of this and that. That's when I start looking more closely at the stocks that have a safety of margin, more of the beaten down stuff, more of the blue collar kind of stuff, or things outside of the high growth multiples, but I'm adapting. Likewise, when rates go down and so on and so forth, I take more risk. But you can't, it's a simple idea. It's wise to change when the circumstances change. So easy to understand, right?
Yeah.
I think the more interesting thing and more useful lesson in this particular moment we find ourselves on September 8th, 25, is going back to this quote. When things start getting more chaotic, meaning when variance goes up, there's, call it, more bad players at the table. You're seeing all kinds of stocks going, rocket ship emojis. The mistake is variance chasing, or in poker, it would be adapting to the level of the variance, meaning increasing your variance. So if everyone's playing like shit, all of a sudden you're like, I can't beat this because it's so chaotic. And you start playing like shit because you basically kick out all your fundamentals out the window. The play here, rather, is to remember that in the short term, the variance is going to do what it does. You're going to have bad cards winning. But if you stick to the fundamentals and you then play correctly and you really dig deep into the patience bin, then you can survive that variance, and then your good cards that you're holding will in the medium to longer term beat that bad game. And in market, it's basically, I think the lesson here is be very careful chasing the stuff that merely has the huge variance. If you have the long term, investor mental frame on. So I'll pause there. How's that land for you?
Sounds like I'm listening to myself talking. Yeah. That's exactly right. Yeah. Don't chase the complete chaos just because of its chaos. like find quality, try and be a bit counter cyclical to what the rest of the market is doing. And when things are volatile and wild, like retreat to a place of kind of safety and security a little bit.
Right. So a disciplined investor doesn't copy that behavior. They might take small measured positions against it, accepting the variance and let fundamentals win over time. And as a side note, I don't know, it doesn't feel like I'm arguing against myself, but when I took that little flyer position in open door technologies, it's kind of nuts. Actually, today, it's like up 76% in 2 weeks, right? So that's what we're talking about. But a couple of things. I knew I'm not fooling myself on this in any way. I'm not like abandoning my fundamentals. So I knew the game that I'm now playing. And I also liked the other things I talked about in the previous episode. So listen to episode 96 when I kind of lay out the bull case that's beyond mere FOMO and YOLO and stuff. And I sized it appropriately. I'm not just ruining my whole game. And so I think I don't know. This is the art of investing, right? I think there's ways to, if you're very deliberate and aware of what you're doing, to sort of try to balance these two as long as you don't fall into obvious errors. So hope that's
Yeah.
useful.
No, it's good. Yeah, it's good stuff. It's good stuff. And I'm going to hold you to that a little bit when we start going through your 10x portfolio, because maybe, you're betraying those beautiful ideals you just described.
All right, Badger. Is that what we want to do next? Badger me over my 10x.
Yeah. Yes, we love a good badgering. Yeah. Should we
Yeah,
give a
that's
bit of
fun.
context before we get into this topic? So I think it was way back in November, end of November 2024. So about 10 months ago. And you sort of threw together this like random assortment of chaos stocks and said, these are my 10x stocks. These are all going to 10x. And I think at the time, we had a laugh about Coherus Biosciences. If you go, it's like episode, I don't know, whatever, like 20 or 30 or something. It's a long time ago. And you were like, I'm 75% sure that Coherus is going to 10x. And then I got my badger claws into that. So anyway, you had like a bunch. Some have done really well. Some are languishing. But this is the nature of, and if I put the claws aside, this is the nature of like investing in some of the crazy stuff. And so, yeah, maybe your opinion's changed. So today, you're going to walk us through, give us like a sense of where your 10x thinking is today. And you're also going to show us the performance of your results over the last 10 months.
And one correction, Badge, this was not just a random conglomerate of companies that I slapped together. This was pretty much a mirror of exactly what I was holding in my portfolio at the time I made it. And it was just me, going over my holdings and kind of all of a sudden I called it a, light bulb moment where I'm like, holy shit, is it, I'm not holding any companies that are obviously the kind of blue chip, big market cap. They ain't gonna they might do well, but no way in hell they're gonna 10x. I was holding, turns out every company I thought has some shot at really becoming much, much more valuable. So what I tried to do, and this is, a crystal ball, a little bit of hocus pocus, I tried to assign some probability. How likely do I think it could do 10x and how long it would take?
Yeah.
And so here's my update. So it's sort of going one by one. Coherus Biosciences was $1.11. It's now up 19% since the call. The reason, and my odds were 50%. I would still keep that around there. And that's because the market cap is tiny. So it only needs to get to $1 billion. It has an FDA approved drug ramping, bringing in money to fund future studies. And it has two really good shots on goal that right now in the oncology business have the interest of big pharmaceuticals saying, oh, wow, this could really help with cancer curing. I'm not going to go into the technicals. So Hugely underrated, I think, undervalued still. All it would take is a biofarm to buy it out on some good data in by 26. So I'm calling 50-50 because right now the probability is in its favor, what we know in terms of the data. But, in biotech, you never know. So hugely undervalued, still confident.
And it's one of the smallest market cap companies in your list of 10x stocks. And when something's a tiny
The
company,
smallest. The smallest.
yeah, okay, yeah, it's more like when something's small, it's much more likely to multi-bagger. It's also much more likely to go to zero. It's like the nature of being a smaller company. I'm just going to hold you to account on one thing though, because I think you did like an interim update. So if we're just comparing back to like the announcement of the 10x portfolio, you had that as 75% and like it's a 10x possibility. You've now reduced that to 50% and it's a 10x maybe. So that's just kind of contextualizing because I did dig into that one. Maybe
Oh, yeah,
someone
that's great.
when Badger
That's
Scarf
great.
landed. Yeah.
Yeah, and I think that's fair. When I say maybe, because everything for Coheres depends on the data we get by the first half of 26, and I can't control that. So in biotech, it'd be foolish to say it's, I think maybe 50-50 is the most honest way I could look at it. But I feel good. I'm not going to be surprised if it 10x's. Okay.
So just to help me out, because I've got like in my entertainment options portfolio, I've got like two different calls on Coherus. So I shouldn't be selling those. You're telling me I should sit on them.
No, I have bad news for you, Badge. Well, no. Actually, do not sell because right now they're not worth that much. But we still have what 5 months till they expire in January, and any moment, Coheres could be bought out for a huge premium. So there's that. But the next thing I'm looking for is calls that are dated past the first half of 26. Those are ones that have the shot at 10x. Yours are in danger of expiring before the data comes out. Next up on the list is EOS, ticker EOSE. I have it at 70% of 10x. Currently, it's up 160%, so it's 1.5 of the way there. This is the one I have the most confidence in. Uh, it has every tailwind in the world. I don't know. Do you want me to say much more because I've said so much about EOS in the past?
I think it's one of your highest confidence. You talk about it a lot. Probably don't need to dig into like who they are and what they do. Just go back and listen to like a recent episode. It's the one stock I'm always telling Krzysztof stop talking about because he talks about it so much. And it's one of the ones you're most confident about, and you're on the journey. So yeah, looking good.
Right now, in this moment, there's like 5 million breadcrumbs. Every tailwind is behind it, from taxes to AI to fixing electricity grid to them buying a second line to looking for a second factory to having enough capital. I mean, all these things are just like blaring like this is a monster at the very beginning stages, but we don't yet have like an official order from one of these, like a big order. And as soon as that drops, this thing, I would increase the likelihood of a 10x even higher than 70%. But it's not there yet. So
one thing that is interesting, like you've got this as 2 years to 10x. So that's what it was like a year ago, 2 years to 10x. I don't know if you looked at that column again. Like, what is your sense on how long to 10x with this one today?
when I wrote the 2 years, the stock was a $600 million company. So going back from that original, that meant it would need to get to 6 billion, correct? Uh, and in 2 years, that means basically in 26, in the year 26, uh, we will have or have not the orders in place, and the roadmap will be very clear. The revenue ramp will be clear if they're succeeding. And because the market is forward looking, at this point, Badge, once we're past that initial, call it inflection point, then for EOS, it becomes a copy and paste enterprise. We have lines 1 and 2, they're sold out. Then the market's going to do the math and say, oh shit, the DOE is also funding lines 3, 4, 5, 6, 7, and 8. And it's going to have, the multiple expands. And then we get to, from whatever it is, 2 billion now to 6 billion is totally possible. We could get to 10x in 2 years. So I stick by that.
All right. So you're kind of directionally today, you're looking for like a 3.5x in a year, and then so you're still standing by that original 2-year goal.
Correct.
All right, good stuff. You made me buy options on that one, so I'm feeling good about that. Good stuff.
Nice. Yeah, I forced you. I forced you into getting rich. Okay. Relay Therapeutics, that one's my worst laggard, down 15% from the original call. This is the one I revised downwards in my portfolio review, and that's simply because the time frame extended. At least in the short term, there's not going to be much doing. The 4-year minimum is, I think I stand by it because it's going to be in 28. I believe that we're going to get the clear data that this thing is going to be the next blockbuster drug in cancer, especially breast cancer. And at that point, to go from 600 million today to 6 billion is totally doable, but the data is not going to be in for some years. So my confidence remains very high based on the strength of the data, just going to take longer. So right now, the price action really is immaterial. It's just, algos and hedge funds trading shares for their own internal purposes. Next up is iron. This is now my second best performer in terms of this portfolio, up 142%. So also 1.5 of the way there, from $10 to 26 today. I don't know if you saw this badge. They just were what's it called? They were like they were on the All In podcast, All In Summit thing, and they spent a good deal of marketing to basically partner with that whole world. So they're now in front of everybody's eyes. And we talked about iron last time, so I won't go into all of that. I have never been more confident in iron than I am today. I actually think the 10x might come before the 3 years. Once we get news of how they want to play it, whether it's a major hyperscaler paying megabucks for their gigawatt hours, or whether they basically keep buying the GPUs and sort of turn themselves into one of these hyperscaler transformer like companies. So high confidence. I would increase the odds of 10x now to, I don't know, 60% from 30. Double the conviction of where we were.
I bought this one in my own portfolio on the back of your repeated monkey chimping about it. And we did like our 4-hour mammoth like review of the King of the Jungle portfolio. If you didn't check it out, episodes 90 and 91, they're well worth a listen. And you got like 10 minutes on every company we both own in our King of the Jungle portfolio. Like most of the companies here in the 10X are in that list. Not all of them, but most of them. So go listen to the Iron Energy one around that. But yeah, I'm a fan now of this company's business model too.
Awesome. Side note for any of you listeners, longtime listeners that are this deep into our show and still listening, I recently added a sort of I made a basket of this kind of play, this sort of transferring, electrons and power and GPUs play. I added Cypher, ticker symbol SIFR, and I'm looking to add even more companies like this because it seems to me, this is a pretty clear thesis badge. The gigawatt hours are in such demand. There's only so many of them to go around that any major AI company just needs the power any way they could get it. So even the smaller, less sophisticated players below Irons tier are also going to make bank. So don't be surprised if in the King of the Jungle you see Monkey buying some additional kind of bit players, as it were, to expand the basket. Okay. Tesla, we just talked about. It's basically neutral from where from last year in price. I put the time target to 12 years because to go from 1 trillion to 10 trillion is not going to happen overnight unless you're Nvidia. Right? But as we talked about earlier in the show, it's doable. It just needs a maniac at the helm, and we have a maniac at the helm who's now motivated. So I had it at 20%. I don't know. I keep it. Seems like it's still a maybe at 20%. I'm not more negative.
It's of all the ones in your list, that's the one I'd be more confident about than you have it. Mostly just because you have it as like a plus 10 years thing. The world will be so different in 10 years' time. Like I could almost guarantee half the companies on this list won't exist in 10 years' time, but I'm relatively confident like Tesla will still exist and be like some sort of bagger, maybe not a 10 bagger, but like a significant gain from here.
Okay, Monkey's going to throw a rotten banana right back at you. There's no way the only company that might not exist is Coherus because it's just so small. So I'll grant you that. The others they're just too good. There's no way.
This isn't a criticism. Don't take this as a criticism of your list. I think a number of the companies in my portfolio won't exist in 10 years' time. And this is actually more a reflection on just kind of how I think the world is going to change over the next 10 years. Like markedly so. It won't look the same in any way. The quantum of change is going to be 100 times the quantum of the change of the last 10 years.
Agree. I think you're wise to say that about your own portfolio. And this is also not a rotten banana in this case, but you have a strong contingency of, call it AI software-ish type companies. And that I could totally see that changing radically. I diversified into more of these biotech stuff. Biotech, and you could see what I have, but those are not as in danger of complete extinction. So anyway, let's move on. Next up, I had AST SpaceMobile, 35% odds of 10x. We are right now, I'm up 70% from the chart. I had the minimum time as 3 years, and this still seems about right to me. It's interesting because today we got big news on AST, um, which is that Starlink bought its own spectrum, kind of confirming that we now are going to pretty much have a duopoly in terms of space broadband coverage. For my money, I know I'm wearing a bullish kind of bias glasses at the moment, but I do think that duopoly status was already a given, and that the market is so friggin' huge that nothing really changed for AST beyond the market saying, okay, Starlink was willing to pay 18 billion or 17 billion, but I think 17, 18 billion for this particular spectrum. And that's exactly what AST had done with the previous purchases, and the AT&T bought spectrum for whatever billions, and the AST and these conglomerate telecoms are working together. So if AST's market cap right now is something like 15 billion, then it's sort of like proof that the market is valuing AST as though undervaluing, because if the spectrum alone is worth 18 billion and AST has a bunch more and it has all the tech, then to your main point, Badge, as it's execution risk, which we've known all along. And I'm confident that these companies working together with AST are going to get the job done. I'm putting this at 3 years. because their launch cadence is scheduled to increase rapidly over the next 6 months. And once the proof is in the sky, then it's the market doing the math, and this thing could re-rate incredibly quickly as long as shit doesn't blow up.
I'm a fan of the company, and I bought stock twice, and it's now like a 2% position in my portfolio, so it's actually relatively substantial for me. I'm also a fan of SpaceX and Starlink, and I'm also a private shareholder of SpaceX. You told me about the news today, and I haven't, literally just before the pod, and I haven't had a chance to read much about it. But I do think this points at like a mud pie I was throwing at ASTS before I became a shareholder. And it's like it's a material risk for the company. And just to refresh ourselves on what that risk is, like none of us know today, unless you're working for SpaceX, you don't really know the capability of the Gen 3 Starlink satellites, which are bigger, much more capable, higher power, like different technology to Gen 2. And it's been a bit of a pipe dream up until now because these things are big enough that they can't launch them on the Falcon 9, like the existing reliable workhorse rocket that's going up like every week. They need Starship. And so I think probably the reason that SpaceX have only literally just announced that they're going to buy like this massive chunk of spectrum from EchoStar, I guess they must have owned it previously, is because they just last week finally did a successful Starship launch. They deployed like some dummy satellites just to prove that they had the capability, and then they did like a controlled splashdown into the ocean. So like full success. And they might have some other failures, but now they're on the path to having like the workhorse being not Falcon 9, the workhorse being Starship with much bigger payload capacity. And so at some point soon, they're going to start deploying the Gen 3 satellites. And so the whole bull case, now I think it's probably a 3-horse race because Amazon's Kuiper, they're yet to sort of show their hand as well. And there's room for lots of constellations. The big advantage ASTS has is like the business model advantage in my mind. And this is your thesis, but I kind of stole that bit when I became a shareholder because they don't have to own spectrum. They sidestep that whole thing by partnering with very big, like national level mobile operators all around the world, like Vodafone and AT&T and all the rest. And they have a deal where they use their spectrum. So they kind of bypass the need to buy spectrum. And they've pulled a brilliant business move there because SpaceX have had to go out and buy at like multi-billion dollars a chunk of spectrum. I don't know about EchoStar. I don't know if that's like just North America or the whole world, but they might have to do more deals like this to have like enough spectrum to deploy a competitive service. But they got like bottomless pockets pretty much because shareholders are just throwing money at them. So like their ability to like fund this sort of stuff is without question. And if their Gen 3 satellites are, as a constellation, if they're able to provide a superior service to ASTS, like it's an uphill battle for ASTS because they don't have launch as well as everything else, whereas SpaceX can just launch this stuff almost for free with their spare operational capacity. So I like both companies. I like being a shareholder of both companies. Frankly, I have more of my own money in ASTS than I do in SpaceX. But like ASTS have got a massive uphill battle, and that's why it's a 2%, not a 20% position in my portfolio.
I think you've made a couple of errors there. I think the technological advantage that AST has over Starlink that is known is much larger than you think. That this version 3, whatever it is, still cannot surpass ASTS's pure first principled broadband video capabilities. It's going to be better than what they have, but nowhere near because of ASTS's patents. And I think this is a known. And this I did. I can't explain it in terms of, because I'm not an engineer, so I'm not yet at the level of being able to tell you exactly why. But I've spent enough hours on this thing to be quite convinced that that piece is inaccurate on your end. That they still will need dishes. It just won't be as good.
Well,
So
they definitely won't need dishes. Like they are definitely deploying a direct to cell service.
it still won't matter because they're smaller. And in a duopoly, I just think whatever they do is just not going to be better than the AST. So they're not going to surpass them based on just sizing and the physics of the stuff. But assume so. I mean, let's go back to this.
My caveat was as a constellation, because there will be like 100 times more Starlink Gen 3 than there will be ASTS. And as a group of like 6,000 satellites, big satellites, compared to ASTS's like 70 massive satellites, I'm saying that that's like a difficult battle for ASTS to fight. That's all.
And I think I'm saying that on the technological end, bigger is better in numbers, more is not better, but they have an advantage because of the physics of the thing, which I can't explain to you other than uh, let's go back to this because of the deep dive we're going to do on them. But I'm convinced that what you're saying here is inaccurate on the technological front. So we could revisit this at a later time. But my thesis is due to this, I'm not worried. My position is I'm not worried about Starlink outcompeting AST. The existential risk is, though, as you say, it's the launch. But even then, they're going to partner with Blue Origin and Rocket Lab and SpaceX itself. I am not worried about them getting the rockets up because of the launching capabilities. That's going to be commoditized relatively. So not a risk really for me. Timing is a little bit. People are getting impatient, but that's not part of my thesis. Buster. So where was that? I had it at 30.
By the way, sorry, literally as we're talking, my buddy Albert WhatsApps me and says, "Have you seen the SpaceX EchoStar news?" So like this is hot off the press news right at this second.
Yeah. Oh, actually, that reminds me. When the news hit this morning, I noticed that T-Mobile dropped 6%, somewhere around 6%. Why would that be? Because it's been known, at least the bulls are making this case, and I agree with this, that T-Mobile is the largest telecom in the US, and they're the only one that basically is not in ASTS's camp. They made a deal with Musk and Starlink. But it's also been known that Musk is not, that Musk is going to temporarily use that alliance to sell Starlink, but then will, in a sense, backstab T-Mobile and create his own network and basically leave T-Mobile out there with nothing. That's the Trojan horse meme. The stock market is reading this in exactly the same way. And if I really want to be bullish, I see that all the telecoms that AST aligned with were correct. T-Mobile, the outlier, was wrong, and they're going to find out the hard way. And that eventually T-Mobile will have to come over to the AST side because Musk is going to do his own thing independently. And that's why the Trojan horse meme, I think, is funny, but also has a lot of truth to it. And yeah,
Okay, I understand your meme now. That's good. Maybe I haven't had a chance to think about this, but maybe the problem is if you're doing direct to cell, like you have a SIM card in your mobile phone, and so direct to cell, the purpose of that isn't to send like a signal to like a dish on your house to have like fiber optic capacity on your house or your mobile home. It's literally to talk to your cell phone, and your cell phone has certain capabilities. So like it's going to be quite complex for Musk to essentially launch what would amount to his own mobile phone provider to then issue like an eSIM. I don't know how the technology works. And then, like my Android phone can have like 2 active eSIMs at a time. So then you need like your SpaceX one plus your regular one. And if you go on vacation, you'd need anyway. So I think the beauty of them partnering with T-Mobile, even though it doesn't work like that's not like a global proposition, but the beauty there was like if you're a T-Mobile customer, you then just get direct to sell like at sea or wherever you are in the world or whatever. And it's part of your like existing package. It's going to be harder. I haven't thought about this at all, but it's going to be harder for SpaceX to launch like a consumer-facing thing that consumers would want, because I think there'll be like a compromise on the device just in terms of the number of SIM cards you can have. Anyway, don't know. But you could be right.
Let's see how this plays out. But right now, in this moment, I'm reading the market's reaction, and when we're dealing with hundreds of billions of dollars and it's down on news that Starlink acquires its own thing, and it's been a known, I'm I don't know. I'm not expert enough on telecom interior stuff yet. I'm working on it, but net, this looks bad for T-Mobile and good for AST. And to finish out the segment, my 35% AST chance at 10xing, it's 70% of the way there within 3 years. I'm maintaining that as the proper odds and confidence, and nothing's changing. I'm good.
I feel like we're doing a live stream because Albert says, I hope the conclusion is not that ASTS is fucked. So I think our conclusion is it's not fucked. But
no.
Complexity. Yeah. There's complexity to come. Yeah.
Oh, yeah. I never thought that for a second.
Yeah. I'm just answering Albert's question live. We should definitely do a live stream, maybe for Patreons at some point soon. Got episode 100 coming up. Anyway, we'll chat about that.
Yeah. We could throw a jungle party. Yeah, we could. Yeah, I could put on my monkey outfit because the duopoly was already known. That's why. I mean, there's just nothing really new here, other than T-Mobile's getting more fucked. Okay, TransMedics is sort of. I have it at 25% likelihood of 10xing. It's 56% of the way there. I have it at 6 years. Why? Because it started at only 3 billion, so it'd have to get to 30 billion. But it's got such a great, it's just executing the hell out of its roadmap. It has the massive kidney expansion on the way. It has global expansion on the way. To me, it is one of these bio med tech companies, kind of like Intuitive Surgical, where if you could find its niche and it's just excelling and management is solid. And, I can't give you the proper numbers for, I can't predict as not a medical insider what the medical world's going to look like in 6 years, but from the current position of execution and margin of safety and rate of growth and being financed properly, I remain confident. And 25% might be a little low. It might be a little low given the recent report on the rate of growth increasing. But, medtech and who the hell knows, 1 out of 4 chance. I don't know. That seems more reasonable than not. I think no reason to update that.
I might challenge this one a bit because I am a TransMedics shareholder. And I know what the company does, and I do like the company. And also, as one of the ones, like I gave as an option to all the kids this year to say, like, do you want to buy Rocket Lab or TransMedics with the Christmas gift from Katrina and myself? So I'm a fan. I'm not sure about its 10x potential. So I think maybe you added this in your interim update. This wasn't in like your 2024 list, but it's here. So it's a $3.5 billion company today. Like, is the market even big enough to support like a $36 billion valuation? I don't know that it is. I know they're sort of inventing new ground, and the technology that they use expands the addressable market for transplantation, because organs can stay viable for much longer, and so they open up like opportunities for transplantation where they didn't exist before, and in geographies where that didn't exist before, because you didn't have enough for a patient population, and now they can like fly these things like coast to coast. But can it be a 30-something billion-dollar company? I don't know.
This is the question to ask, but I'm pretty sure that when you take a global demand for organs, which they haven't really touched, and you add, so it's not just the organs, but it involves all the services around the organs and making life easier for all the surgeons. That's why, they're also in the airline company now, and they're more a services company than just an organ company. I'm pretty sure 30 billion, not pretty sure. I am I am confident.
25%, right? It's a possibility. It's that you accept it as a possibility.
Yeah, that yeah,
Yeah, fair enough.
but it's because it's doing so much more beyond, call it, being limited by just the organs, that I think once the cash flow is coming in and they have this network of services operating, that won't be very hard to build another tier on top of that. And yeah, but 25%, I stick with it.
Yeah, fair enough. It's not. I don't own it because I want like a 10x from it. I own it because I like the mission, and it like aligns with my ethos of making the world better through technology and innovation. But I do think it's got, you know, I think it's lower risk for like a small company, and I do think it's got like good growth potential. But I'm not looking for it to 10x. It's not in that category for me. But I don't reject the fact that 25% of the time it might be able to.
It's that, right. I think that's wise. I didn't have it originally, but when you're executing so quickly and you're growing revenue so quickly, and it's now a matter of time, just time passing, it's surprising that a company that's around 4 billion can, 4 billion is past the death chasm, and it's not overnight, but I'm putting it at 6 years, 5 years. Kidneys are, everybody's got two. So, all right. Chainlink, I had as 49% likelihood. That was me being cute because it's, does the world adopt the standard or not? It's up 38%. I had it at 3 years because Chainlink was just meeting with the DC, with the SEC just the other day. The new crypto regulations are going to come out in the next few months. 2 ETFs are now filed for Chainlink. If there's one holding in my entire portfolio that I think could surprise everyone in 10x sooner than any other, it's Chainlink. And this is in this position of I don't want to say binary exactly, but because we've seen it happen with Ethereum, it's like the moment that all the banks and Swift and conglomerates say we're on board, and this is what they have said, and that switch gets flipped, that kind of re-rate is entirely possible for something like this. So the evidence keeps stacking that this is the protocol that's being adopted. The regulations are obviously now favorable because bills are being passed. I am going to change my likelihood of a 10x from 49% to 51%. I think it's now more likely than not that this happens. And the 3 year box, I'm going to upgrade it and say it's entirely plausible within the next 2 years that we get the 10x. All the breadcrumbs are pointing that way. And it's low enough market cap that yeah, could happen. So confidence goes up. Bitcoin, I won't spend too much time on. I put at 15 years. The path is, it's done nothing but gone up for its 14 years of existence. Nothing changes for me in that thesis. It just needs time to get to, what would it be? 20 trillion. It would overtake gold. Basically, it would overtake gold as the world's most valuable asset class. I call it 15%. I don't know. I don't know if that sounds plausible given what the trajectory it's on. So maybe quantum computers somehow screw it up. There's that security risk, but Bitcoin people are also thinking about that. So I'm leaving it as 15% in 15 years. It's not a company. It's, it's its own asset class. So who the hell knows? And the newest addition to the chart, which I added only a couple months ago, is AMD. I have it at 20% likelihood. It's currently relatively neutral from where I bought it. I'm saying it's going to take 10 years, and this entirely depends on inference being the next wave of AI, and that AMD is the better play, or merely as good as NVIDIA, and or better because it's more modular, and it has a much lower market cap of about 250 billion. So it would basically need to kind of pull in NVIDIA is what I'm saying. And before the AI thing happened, Badge, you and I talked about NVIDIA a whole bunch. I really didn't think a company like NVIDIA could grow so fast from a huge size already, but because NVIDIA did it, I'm not going to be skeptical that could be done again. As long as AI is alive, AMD is very much in the game. 10 years is, I don't know, I'm sort of making that up. Could it be shorter than that? Could it be 5 years? NVIDIA did it in, that major growth curve happened in what, over 2 years ish? So if anything, I'm going to reduce the minimum time down to 5 years, as long as the AI story keeps playing out the way it is. And we're going to see so the inflection for AMD is going to start happening in Q3 and Q4 and Q1, where we see whether this, in fact, keeps getting adopted by the metas of the world. So I blabbered on quite a bit. What do you anything else that caught your eye about this whole setup?
This is a certain style of investing. And I in my own portfolio, I have a few companies like this, and I consider this like the venture end of my portfolio. So in my mind, small allocation for me, very high risk. If they succeed, like the gains will be enormous. But in that venture category of stocks in my own portfolio, which includes some of these, like I say up front, I expect like 8 or 9 out of 10 to go to zero, but I just need like 1 to 10x and it covers the losses, all the rest. And then as a category, that makes sense. So, and a bit like our Palantir conversation last week, where we remorselessly got stuck into a YouTube commenter, and you said, because this guy had made like a dumb comment about valuation, and you said, like, is this a sign of the top? So I think if you've just listened to this segment on the Wall Street Wildlife podcast, you could incorrectly, having listened to the last half an hour, go, oh, like the top is in. Listen to these guys. Well, this guy. Listen to this guy going on about these like wild companies and like, 50% chance of 10xing, like the top is in. So I think if you were I like your list, and if you were only to moderate down like your expectations and the chances of 10xing a bit, I could really get on board with this initiative. But I do think as a category, although I'm going to combat what I just said, like you're over optimistic. But then the saying is, optimists make money and pessimists sound smart. So I don't want to come out of this segment sounding like the smart one, because if a couple of your companies do go to zero, you only need like 1 or 2 to succeed. So I totally buy the approach, but just temper your enthusiasm just a little bit. Because, yeah, I want you to be right, because then, we'll have one of the greatest podcast records of all finance podcasters, right? But realistically, and also I wouldn't be right, because then you can like retire and we can both like move to Spain or Italy together and like have a giant ranch or whatever, right?
Yeah. Let's start shopping for yachts.
Yeah.
uh, I accept your point. I have a little bit of what's it called, mental contradiction going, in that company by company, I actually do believe I am highly optimistic, as you say, but that there's incongruence, because I would be shocked if obviously all of these went to 10x. I mean, the odds of that happening are close to zero, right?
Yeah.
And yet, piece by piece, I'm like, yeah, this could happen. So it's basically probability math, right? If you multiply 70% by 30% by 20%, you get a lower and lower number. So it's kind of hard for me to look at this. So individually, I'm as optimistic as ever. Holistically, obviously, I'm going to be wrong about some of these, and it's hard to say, which ones. Coherus is the only one, I suppose, that I'm totally on. Like,
Maybe there's a point there, right? Because like the real answer is you don't need a 10x to be a successful investor. And if you owned, well, you do own everything on this list. Like, in my view, some will go to zero, some will probably 10x and more. One of these might be 100x one day. But most, like say TransMedics, they might deliver, like nice compounding returns over the 10-year time frame. And, at some point they become, start paying dividends and become like a mature company. You don't need a 10x to be a successful investor. So maybe we've painted this segment as like black or white, will they or won't they? But if you like, most of it is in the grey. Like if any of these investments, well, two already have, deliver like 100% return, then you've already like beaten the market soundly, because it takes the market like 6 or 7 years to deliver 100% return.
yeah, all right. But this is a nice segue, because this morning when the AST news hit, I was in the gym. I was buffing up my monkey gorilla arms, and at the moment the news hit, AST was down something like 14% at one point, and EOS this morning announced that they're rolling out a software platform to basically control battery systems. So they're expanding in a sense. We always knew they were doing this, but now it's an official product. So they're going to collect more and more money for, call it, services via software, which is cool. And the stock popped a little bit. Now it's down 3%. That's irrelevant. But I was I was deeply considering pre-market selling some EOS shares and actually allocating, not selling AST, but allocating those shares to AST. Now, what prevented me from doing that? One, I knew we were recording and I thought it would be good to actually talk this out. Two, God damn it, I swore at some previous podcast that I would not sell a single share of EOS for the whole year. I think it was our New Year's resolution podcast. And I'm a monkey of my word. So I didn't want to have mud on my face. But and this is not negligible, in my monkey king of the jungle portfolio at this moment, EOS is at 36%. So because I also have an option call. So I'm controlling 450 shares. So it's 36%. That's a ginormous position. And AST, because of the drop, is down to merely 16%. So there's more than a 2-to-1 of EOS to AST. Based on what we said today, I remain as confident in AST as I ever have. I remain as confident in EOS as I have. But in wanting to kind of, trim along the edges, as I like to say, just nip and tuck here and there, I thought it would not be an unreasonable thing to trim EOS a little bit, couple of percentage points and make EOS and AST a little bit closer.
You're looking for my so look, I'm never going to discourage you from exercising good portfolio management discipline, and having that level of exposure is nuts. So, and whenever we have a resolution, like I resolve never to ever sell a share of Intuitive Surgical. And actually, I just added some the other day. I'll tell you about that in a second. But it's an aspiration, right? And the world changes, and companies change, and the risks change. So you can set an aspiration, but you should still revisit that from time to time. And your exposure, I'm actually I don't care about your King of the Jungle portfolio, like the real honest answer, because it's an immaterial amount of money in the grand scheme of things. What I care about much more is your exposure to EOS in your real money portfolio, which is much more substantial. So presumably you have less than a 36% allocation to EOS there. Like, you should definitely trim that, just because it's insanity, a man of your age having a crazy exposure like that.
Well, Badge, quick correction is, and this is why our podcast matters, is because the way I'm running my monkey portfolio, even though it's new to my real money portfolio, I am trying to make the kinds of decisions that I do in my real. So I'm not thinking of it as like majorly divergent. You're a different case because your two portfolios don't necessarily, they're not exactly equal, but in terms of amount, the gaps in amount and like how you're using it and so forth. But I do want us to continue to model the King of the Jungle as though it's as legit a real life question as possible. So to me, this applies to both scenarios. The King of the Jungle is not just funny money.
My King of the Jungle is very similar to my real money portfolio, and I share both on X. So you're saying you have 36% of your real money portfolio in EOS?
No, because Chainlink is bigger than EOS in my real world. But I am saying that this decision and the quality of it is as legitimate in monkey land as in real world land, and it's the same question. So I put it back to you. The idea was to trim EOS a little bit. At the moment, there was a 20% gap in the price movement when I was thinking of doing this. As we recorded this, EOS is down 4%, AST is down about 6%. So basically, there's only a 2% gap in the share price. So I kind of missed the hot moment of making this trade. But long term, not thinking in short term, would buying an extra, let's call it an extra share of AST, to get me up to 32 by selling something like 5 shares of EOS, would that be in principle a move you would stand by or support me on?
You play it however you see fit. But if this is if this, as you say, okay, you're right, like this does mirror our behaviors and our thinking as investors. So based on that alone, I definitely support the idea that you should diversify EOS. I do not support the idea that you should invest more new money in ASTS just because it's like a 16% allocation. That's already too much in a diversified portfolio. You should put, if you like, you told us how much you like IREN, like maybe stick it in that, stick it in some other stuff.
But IREN is at 20%. So those are my top 3. Those are, so
get some new freaking ideas then.
I've got ideas coming from underneath my tail, Badge. So, all right. Okay. So basically, listeners, what I'm hearing is Badger is nixing the EOS to AST trade, but encouraging Monkey to reduce EOS just on principle, which Monkey will not do. so I remain unsure of what to do, and I might end up doing nothing. So for those of you wondering what I end up doing or not doing, we have our Wall Street Wildlife, our patreon.com/Wall Street Wildlife Dolphin channel, where you will be the first to hear about whatever it is I did or didn't do.
Very good. And if you do swing by the Patreon right now, in just the last couple of days, I published what turned into quite a big article about two of my core holdings. So I've got like 30 something stocks in my real money portfolio and 15 in my King of the Jungle portfolio. 8 of my stocks I currently consider to be core. And these are essentially like, I would just give these companies, I really believe in the mission. I'll give them the benefit of the doubt if things start to go a little bit askew, because I really believe these are my foundational stocks. So 2 of them are Intuitive and Axon. I wrote what turned into a fairly big article, update on the thesis for both of those. They're both doing some really exciting stuff right now with some real major capabilities that have just come out. I'm going to say go sign up at the Patreon and read the article, because I'm not going to try and do justice to it in a very short slot on the podcast. And I think I'm pretty proud of what I've said. And I will just say, though, I did do a portfolio action, which I notified in real time to members of our trades channel on the Patreon. And I ended up buying Intuitive Surgical in my King of the Jungle portfolio. I don't really know why I didn't own it to start with, to be honest. So I added
It was such a bizarre, gap in your top holding that you didn't include it. But yeah, we're closing the gap between, call it real and and Jungle Land, because they're both real. So that was to our listeners. Uh, when you read Badger's analysis on Axon and Intuitive Surgical, you see a real pro at work, and you kind of see what happens sort of when you start digging much closer into the numbers. And I would say it's advanced level stuff, but it's not beyond understanding. And it's just really solid work. So I was really proud of what you shared with our members, Badge. Well done.
Thank you. Oh, you've posted a whole bunch of good stuff yourself of late. I think we're both trying to double down on the Patreon and like add value for our Patreons, because this is a community like we really want to invest in. So
Okay, so we've been yapping now for an hour and 20. I think it's time to close it out. But I have a little sort of a little teaser for you. There's a new streaming show on Netflix. I think is gaining the, what's it called, the the water cooler gossip. Like everyone's talking about this thing. That's how I heard about it. And it's what's this thing called, Unknown Number. And the premise is that this
upfront, before you say anything, no spoilers. I've not seen it. It's on my watch list of
yes,
things to watch. Do not
yes,
spoil the show. Okay.
correct. And this is a kind of whodunit. So if you're at all worried about me spoiling it, just stop listening now, because God knows what I'll say.
Well, I'm signing out. I'm signing out. You can wrap this up on your own.
You have to take the risk, buddy. So you're stuck with me. It is a kind of whodunit, and it's a show that is the premise is that young high school girl and her boyfriend start getting these nasty text messages, and it kind of they sort of ruin lives, you know. And it's a real, and the documentary shows the real text messages as you watch it, and the whole time, you know, you're trying to figure out, you know, who's doing this. I really don't think it's spoiling anything when you realize that human beings can sort of delude themselves into thinking the craziest of things so that it sort of becomes their reality. And when you watch this thing, you know, the sort of the mind-boggling thing is like, oh my God, like this is real, but how, you know, like how could a human being, you know, act this way or do this kind of thing? And the connection I made to the market, I don't know if this is stretching it, but it feels to me, after you've bought a company and you've invested a lot of money into it, you start potentially deluding yourself. I mean, this is straight confirmation bias fallacy land, that things are one way and only one way, and this reality distortion thing happens. And I think what you and I try to do as best we can is be as upfront with the critiques and the other side isms, and like just naming, you know, Badge, you're wrong about the tech of this thing, or monkey, you're insane for being 38% in EOS, and like just hearing it, right? Like sometimes it doesn't sync the first time or the second time because the force field could be so massively distortive, but it's what we do as humans. So, know this about ourselves and hopefully, course correct at least a little bit. So I'm curious, I hope you watch it.
Okay, I shall. Yeah, I don't disagree with what you said about like our ability to kind of confound ourselves. It's kind of what I just said about your 10x portfolio, right? You're, in my perspective, your over optimism, but we can do this to ourselves in lots of ways. And it's like, I suppose the good reality check you can always do is like get an investing buddy. And if you haven't got one, like come and join our Patreon because you've got a whole like 100+ buddies there, and seek out contrary opinions. Like I do like to have a constructive debate with people that I know personally and also people on X. I've given up trying to do that on LinkedIn because it's all just obsequious bullshit. But on X, like I get challenged, and I may have ripped into like the Palantir guy last week because that was objectively a dumb argument. But I'll learn by debating with people. And the truth, nothing's ever black and white in the world, right? The truth is often somewhere between what you believe and what the other person believes, and there's like everything is just grey. So like lean into that, like, and try and get outside of your echo chamber, because that's where like disaster lies in wait if you're an investor.
Yep, and it's why what we do here in the thickets of the jungle is so valuable, way beyond naming tickers. At this point in 2025, you could find a bunch of tickers on X or 7 Investing or so on and so forth. But I think it is this human touch, dare I say, or like that will help you avoid potentially some bad decisions or encourage you to make some really good ones, because you have like accountability partners in a sense. It's like, it's very true. I do have a badger yapping at me, about the critiques that you raise and whether or not I, open myself to them or try to come up with a reason where logical, legitimate reason why I hear you, but I think that's whatever. I'm doing the work and you're making me do that work. So it's great.
Same in both ways. Very good. Well, I didn't get a chance to chat about my Whoop today because we just ran over. But we'll push this out to episode 98 next week. And I think what I'll do, instead of just talking about Whoop, let's make it a bigger topic. I'll just talk about venture investing and private investing as a bigger thing, because I own like 8 different private companies now. I'm hoping to expand like that part of my portfolio. So why don't we just shoot the breeze on that a little bit?
Okay, very cool. You want to tell us a little bit about our partners at fiscal.ai?
Yeah, we didn't get a chance to show a fiscal.ai dashboard today because it didn't come up in the discussion, but you can bet your bottom dollar I've used this thing every day since the last time we recorded a week ago, particularly in writing my Axon and IS intuitive updates. Just incredible good quality data. Let me just reflect on like why I love this platform over Y charts and all the others that I've used, like Koifin. It's because they have really good quality segment data. So like I wanted to go and understand like the deep, dark, nitty gritty of intuitive surgical and how many machines they've deployed. And that's not like part of your standard like 3 financial statements. That's just like other tables and words in the quarterly report. Well, fiscal.ai, they pull that data out for you and they track a whole bunch of interesting data points that let you monitor the thesis. And you can build now some quite fancy like custom reporting where you can actually, I put together quite a cool custom report while I was in the States. There's that restaurant chain I mentioned ages ago, Carver, that I was kind of negative on. And I plotted a nice graphic in fiscal.ai. I haven't published it as for my own entertainment. It was basically market cap divided by number of restaurants. And because in fiscal.ai, number of restaurants is like a data point, you can map that chart. So you can see what's the company And like a year ago, the company's market cap was like $50 million per restaurant. Now it's down to $25 million per restaurant. That's still like a crazy ass number. Well, anyway, maybe we'll come back to that topic in the future, but fiscal.ai lets you use and manage this data in that kind of interesting way and draw pretty pictures and get insights out of like financial reporting in a way that other platforms don't. So big fan. If you do sign up, like go use the free platform if you're just not using anything. It's really good. But if you want to sign up for a paid subscription, you'd be doing us a big favor if you go to fiscal.ai/wildlife, and then you'll get a nice discount and we'll get a bit of benefit too.
Awesome. And if you found value in hearing us talk about stocks and investing principles and you're not yet a Patreon, get off your asses, you baboons, and join us over there because we got a good thing going. It's really good people, just a good place to be. So, whether it's the $3 sloth tip jar that throws us some coin as a show of appreciation for what we do, or the $10 dolphin trading channel, or if you want to be nuts and get yourself one of these fancy mugs. Team Monkey, Team Badger mugs. Then there's some other tiers, but we do hope you join us.
Great stuff. Are you ready to become a beast of an investor?
Oh, I was born ready, Badger. Your journey starts right here. Rawr.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.